What is up? All right, so I tried to schedule this. Hopefully, if you guys can ping in the server, I'm just on YouTube and I'm just in the server. We'll post to Twitter later on. But I try to get this one out. I mean, when there's not like some major moves happening. But today I could not. Let me just ping him. You guys ping him. Can you ping Diamond? Ping him. Diamond rolls. It keeps pinging big B trades. All right, cool. We're live. Anyways, we were just at such a crazy spot in the market that like I really couldn't. I didn't feel good. Like I was sitting on edge, and I'm like, do I go live? Do I not? But I'll tell you guys why really quick. And so if you're looking at the market, if you're in the market today, go ahead and go to our YouTube channel also. I think it's one of the first videos on just like the main homepage is if you go to it's called like profiting with gaps or something like that. Let me see. Videos. This is called Mind the Gap, right? So this is of the like basic videos. Oh god, this is so funny. Mind the Gap. Watch that video really quick on our YouTube channel. It'll basically tell you exactly why it was like just in such a crazy spot in the market. But let's go ahead and get into this really quick. So I wanted to go over a couple things. So we have earnings season. Pretty much the biggest chunk of earnings season has gone through. We only have one of our Mag 7 left to go, and that is Apple. That's what you see on the screen. I have the fall of the Magnificent Seven up here because we do have a couple fallen soldiers at the moment and a couple surprises, right? Oh, I'm sorry. We have NVIDIA also, which is not this week. So NVIDIA is going to be a crazy one. Let's kind of put that one off to the side for now. The major one that's left this week is going to be Apple. Of these guys, so you got NVIDIA, Amazon, Tesla's in the back behind my cowboy hat, Microsoft, Apple, Google, Meta. We have so far lost Tesla. Unfortunately, that is a definite fallen soldier as of today. Looks like we might be losing Google. I hope we don't because that's my favorite. And surprise, surprise, Amazon is still alive. So, I mean, we'll go with that. But from here on out, the market's going to be in a kind of a chop zone. What I'd say is for sure, the market is in a spot where if you're not long, and I'm in the servers and I'm looking at everything. It's like this is a spot where I just kind of feel like I need to close my eyes, hold my breath, and click buy from a technical perspective. Even though there's nothing good going on out there, it's just at one of those spots where technically I should be buying, but I'm having like I've been making so much money on the short side lately. It's like could the bottom fall off? What I'd say here now is that I do think number one, the volatility index is high, right? It's going to come back down if we get a little bit of bounce. Debit spreads, long call debit spreads, probably your best bet. And I would still hedge those maybe with some short-term downside puts just in case, because we are at that level where we should at least base out. Maybe if you know what I'll probably do this week is probably put calendar spreads. That actually seems a lot better now that I'm kind of like talking it out. But what I'm looking for this week is really at least some basing kind of price action. I don't need to have anything go like haywire to the upside. Honestly, if I do see that, that's more cause for concern than anything. I would really love to see like a very gradual basing motion in the market for the week, right? In terms of main headlines. So again, I really try to look for some like better news, but the stuff that's popping out at me, like number one, home purchases versus rentals at the worst levels ever. I mean, actually ever. So it's 52% higher to rent unless you live in the Bay Area or California, by the way, globally or like nationally, which is like crazy levels for rent, right? And in the meantime, housing prices are not going. They're not going down. Interest rates are at an all-time high, or not all-time, our recent high. It's a little wild. I got headline 41 states sue Meta over youth health. get that, right? And when we were looking at some of the metrics from last week, and I will go through those in just a minute, we're growing 23% year over year for our, U.S. deficit. So sitting at $1.7 trillion. Again, all cause for concerns. Meanwhile, global political tensions at highs. We got people invading places. Oil's like possibly, explode if something funky happens. It's a weird spot in the market, but this is where the bottoms tend to happen. And again, it looks like it's a good spot. I don't have a hard trigger to go long yet. And if you're new to trading, what I mean by trigger, and this is super important, is that you have to have something happen in order for to if this, then that. If this happens, then I do that, right? That's what a trigger has to be. Like you can't, I don't say can, right? Like I don't go along just because something hits my level, if that makes sense, right? Today we did get a if this, then that. That does look like a long trigger, but I need to see it follow through at least for the rest of the week. And I'd really like to see a weekly close over some key levels. But I do have our trajectories and basic metrics for you this week. Also, by the way, this yield situation, right? The Treasury used $879 billion just to service the federal debt. This is why our deficit's getting so much worse. We go into some of the actual economic data points from last week. So we did get global composite PMI flash for October. This was a good thing. So anything over 50 in terms of the your composite metrics or manufacturing indexes, things like that, anything over 50 is actually in expansion mode. Consensus was to be slightly under 50. This is the first time we actually got over 50 in a while. That's looking at growth in terms of our local economies. Last week, when we got the first GDP look, actually out of the gate, we got a forecast, the consensus for GDP Q3 growth. And I think we were talking about this last week, is this is like one of the major metrics for the market, right? This is kind of like the US earnings, if you will. What's true is that Powell wants a subpar standardized growth levels, meaning if par is about 2%, the best thing for inflation, remember, Powell has two charters. One, stable inflation, keep inflation down and promote full employment. I think we can check off promote full employment. That's pretty much done. We know labor market's very strong. So now his only other thing to do is just to get inflation back down. In order to do that, he needs to see GDP at a lower than average rate, which means sub 2%. Consensus came out at 4.3%. The market initially started off just based on that consensus number coming out being at 4.3%. And I'll say, and in the servers, the Fed is very regularly wrong on this. If GDP growth rate really stays this high, we have a lot of work to do on the inflation perspective and from the inflation perspective. And that's going to be a very, very long road to trudge. But they've been so wrong. Like if you rewind 6-9 months ago, we had a negative GDP forecast for this quarter for our Q3 GDP forecast. It was negative, coming in at almost 5%. That was even hotter than the consensus. We'll see, right? I think what we'll really see what those revisions look like, and if that number stays the same. What's true right now, this is the first look. This is the first look at Q3 GDP. So it's we're gonna get multiples. Also, sorry, I'm live on the server, so if you get some feedback, I might mute some of the guys. And they can ask live too if they're in there. Let me see. Cool. All right. We also got pending home sales, and we went over jobless claims. Home sales are not really been market moving events, so I would say it's not. I wouldn't pay too much attention to that right now. It's just something good to know. Durable goods orders, that was an outlier for sure. So this is like washers, dryers, those kind of things. Actual came at 4.7%. Prior negative consensus was 1.7. That's way. This is like your business is bulking up inventories, things like that. So we're starting to see that. The big numbers came in on Friday as the core PCE. That actually was pretty much in line. Personal income month over month, that's one to note. So right now, non-farm payrolls we're going to get on Friday, right? This coming Friday, and that's usually going to set the trend for every month, at least the way that I do my technical analysis. The other thing right now in this economy is sticky wages, things like that. Like, what's the cost of goods sold, if you will, for businesses, and personal spending, right? So our spending numbers, retail sales have been high, much higher than anticipated. PCE is personal consumption expenditures. That's what we're actually spending. That coming in in line was actually not horrible for the market. So I think we kind of stabilized there after this shock of a 4.9% GDP look. And so I guess we'll have to see what happens today. In terms of headlines for the week, we don't have a ton. Well, actually, we do have a ton. So we have nothing today major during the market, little bit of stuff. Monday tonight after hours, we actually have the Bank of Japan rate decision. So if you're not familiar with what YCC is, or yield curve control, that's actually gonna matter today. So keep an eye on that. After hours today, we could see a little volatility. We might get some funky stuff going on later tonight, and some random headlines. Tomorrow we don't have much. Sorry, there's some background. Tomorrow we don't have much, but it's going to come down for us for Wednesday. So Wednesday we have J-Powell, we have the rate decision. That's going to be the big stuff. The market right now is not forecasting that there's going to be any rate change. Honestly, like, it may or may not be a big thing. I'm really not sure. I'd say, like, based on some of the like economic data points, it looks like maybe they could loosen up. But when you look at this GDP, if GDP really is that high, that's going to tell Powell that he has room to actually raise rates. Not that I think he will, but yeah, that's the biggest concerning factor. If we're growing so much, then the economy can actually afford to continue to raise rates, and that's what you got to be aware of. So what I'd say for sure, there's no way that he's going to say that they're done. He can't afford to say anything like that. So highly doubtful that that's there. He's probably going to have some kind of hawkish tone, but keep it probably paused. Thursday, jobless claims, and Friday is our big day of the week. That's non-farm payrolls. That's going to be November 1st, I believe. 3rd, first Friday of every month. So tomorrow is the last day of October. Not typical that we actually close on the lows of a monthly candle. Although it's not typical that we close on the lows of a weekly candle either, and we have the last 2 weeks in a row. So we'll see, right? I think it's just like we want to see this stabilize. It won't be until Wednesday that we can kind of flush everything out, and then Friday is going to be a clean trend and smooth sailing next week on. So it's all going to be about, in terms of market direction, it's going to be about this week's close. Huge calendar on deck this week. So we have today, we got McDonald's, SoFi in the morning, Western Digital, massive beat. Tomorrow morning, my favorite, not so favorite anymore, Pfizer, AMD after the close. And it's not really, so nobody huge up here until we get to Thursday after the close. So we have Apple Thursday, we have FOMC Wednesday, Thursday Apple reports, and then Friday we have non-farm payrolls. So it's like boom, boom, boom. I just hope that we kind of base, right? As long as we don't make new lows, I think we'll be okay. And yeah, I'm looking at my slides here. I mean, we'll play some of these for the most part. I'm not going to be trading anybody that's on this screen here. I will actually go look at some potential pre-earnings moves and post-earning moves for the week. If you want to go through some trades, I'll probably skip that for today just to keep this one short. And then let's see what's next. So the next one, this was Miss Cleo, by the way, for last week. I think she did okay. I think we were trend day for the most part, but for Thursday, Friday, she was pretty on spot. Let's see. So this is where we are this week. So this week, for the Miss Cleo fans, if you wanted to know, this is the theme card for the week. Let's see. Oh boy, same card we got last Wednesday, which led to a major bout of selling to break some. Oh God, this is the first time I'm reading this right, by the way. We also tends to trend bear, which isn't fun for us. Oh goodness. He tends to reverse near the end of the session, or at least run out of steam, which means maybe we have to start poorly. Just have to start poor to finish strong. So this is interesting. That's like red open goes green kind of thing. Uh, what we want to look at this week for sure is when we're just doing a little bit of training in the server, when you're looking for some trends to like solidify themselves, what I don't want to see, if I'm a bull, I don't want to see stocks making highs at the beginning of the day, closing towards the lows. It's just as simple as that, right? Right now, we didn't close on the lows. We're closing we're making highs pretty early that are being reversed pretty early. But some days like today, we actually based out. So that actually that does jive for the most part. As long as we can keep that, at least that kind of trend, then we should be okay. So here's what Monday is. Let's just go ahead and skip to Tuesday. See how right she was. This card pretty straightforward. Represents illusionary gains. Oh God, did we not have this? The other illusionary gains will attempt to rally, perhaps overnight gap up. By the way, they put this out on Sundays. I get it Monday morning, but will eventually sell off in part or whole by the close of the next day's session. Well, we have a session gap we can look at. We'll see Tuesday. What does she say? Haven't seen this guy in a while. Sharp cuts without hesitation. It's a trend day, quite likely. She's looking for a reversal. That's unfortunate. Wednesday, clutching onto our coins tightly, trying to delay or avoid possible loss. Well, if we can base out Wednesday, I'm still going to be somewhat constructive on the week. We'll see. So then what'd she say? Thursday, Friday. So Thursday, different soup, similar. Tends to finish flat or slightly under. So pullback, she's calling today or tomorrow and Wednesday. This is Wednesday is actually FOMC day. So if I tie that together, let's see, FOMC looks like she's saying Powell's going to mess with us. Thursday is Apple earnings. Maybe flat. Finish flat. I might go with the Apple Condor. And then Friday, strength. So the sun is back. Rally early. So again, if we're near the lows Thursday, what's true also, Thursday closes tend to be the best times to go long, and typically long through Monday close, maybe even Tuesday open. So if you're looking at general trends right now, it tends to be Tuesday close, it starts to teeter off. Wednesday's more reversal, Thursday downside, and then Friday, if we're towards the lows, not the last 2 weeks, typically Friday will start to rally off of that. And that's just a lot of short covering. So if we do see Friday bounce, then that's probably short covering towards the end of the season. The in card says we lose energy towards the end of the week, and if selling has been dominant, this is probably the day we finally get a break. It reads to me like the sun is chasing away the darkness once again, giving us the chance to find the light. Well, she's optimistic. Unfortunately, it's not permanent state of being, but maybe next week's cards will allow the light to keep shining. For now, expect that a rally could be muted or sold near the close, but let's hope for the best. It's not very encouraging, you guys. Anyways, let's just do a quick take. So this is SPY. I'm just going to take a look at a quick 30-minute chart. What I was talking about earlier and why I was so hesitant. So here, if you don't know how to trade gaps, it's very simple. And I'm going to pull this back for a replay. So 2 things. This was our open. This is our look at the open today. We had a session gap. So I'm going to go ahead and mark this session gap here. And whenever you have a gap, what you want to do, and this is just how we trade it. We have gap rules, and it's go back to that YouTube video. So gap rules are, if a half gap holds, then it's likely to continue in the direction of the gap. The gap is up. So where is our half gap? Right now, this is your half gap. That's going to be a 50% retrace to let's call it a 618 retrace. This is what was true today. Tomorrow is a different story, so we'll see. And that tends to be a back half rally. If you don't know how to do the day trade setup, I'm not going to go through that. Come join the server. We'll go through all that. We teach that pretty heavily. There was this huge wick, by the way, out of the gate. I didn't catch this. I know some of the guys called this out. To me, this could be gap filled, but I don't know that was even tradable for at least not for me. What we're looking at here is we're looking at, does this half gap hold, right? And so far you test it once, tested almost twice. And at that point, this is my February non-farm payroll level. This is a major trigger for me. We've held the half gap right here. We should expect to see continuation in the back half of the day. That's exactly what we got. This setup actually carried on almost through all of the indices. So here we are. This is where the day closed. We can do that one more time on the Qs. It's the exact same setup. Session gap right here. I'm not expecting the session gap to fill. If you can't get beyond a half gap retracement, forget about the gap. That's like as good as a gap fill that you will likely get in a lot of situations. That's like gap filled, right? Half gap fill, back half continuation in the direction of the gap. Again, these are just our basic rules for trading gaps. So do we get a continuation? To me, my system says that I probably will get a continuation, but we'll go ahead and we'll have to take a look at it in the morning and see what that looks like. I have all three indices here. So SPY, Qs, diamonds. These are the three majors. What's kind of constructive, at least for me here, is that we have these three all in these major reversal type setups. So if you're looking just at a daily candlestick, this is going to show up today like a big giant green hammer. If you're not familiar with candlestick setups, what's most important is that there's no candlestick setup, 2 to 3 candlestick setup that triggers without the next candles open. So if tomorrow we're like open, if we gap up tomorrow, I'm going with it, right? So that's if we gap up tomorrow, I would expect even more continuation. Forget about those downside gaps. If we don't, and this is going to come down to probably a lot about that BOJ rate decision, and hopefully we don't get any headlines overnight. If we don't, then we could start to retrace a full gap, but that's what Miss Cleo says. Hopefully we don't. We'll see. The one index that's not doing that great is IWM. That said, I mean, IWM did hold its session gap down here. This range has been getting tighter and tighter and tighter every day. Everything that I'm looking at here is like, it's just kind of basey, right? So if I can get a break of structure and then a higher low, I think that would be ideal. But that's like a full week of trending that I want to see. That's what I mean by this week. Why do I want to see like really just kind of like basing trend? I don't need to see like full-blown explosion to the upside. And if I do, I want to exit stage left and expect some kind of retracement. And I want to look for higher lows. What's true right now, again, we've kind of broken structure here. This is Friday's pre-market high. We have broken structure to the upside. We're closing on it, right? We did not. I was talking earlier. Are we seeing the highs of the day towards the open, right? So high of the day towards the open. When you have like an equal close towards the end of the day, that's when you know, okay, pause. We're probably gonna have a trend change or continuation, one of the two, and then you get this boom. Austin, I see your question. I'll get to in a sec. When we see this here, we get high of the day towards the open, closing towards the lows on a first day after consolidation. Yeah, we're gonna go right, and we did boom, 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 and every day we've gotten highs put in towards the beginning and closing towards the lows all the way down to Friday. Today happens to be where we put the high of the day in, we put the low of the day in towards the open, close towards the highs. That's constructive. Maybe we get a little press up, but I don't want to see like a major explosion. If that makes sense. I'd like to see us chop this orange box here. By the way, this is an average week's range. If I go from the open today, that actually takes us all the way up to just over 420, which is exactly that prior breakdown level that we saw last week, right? And so what I wanted to do, what do I have this here for? This is, we were doing some fib measurements earlier in the server, but let's go ahead and pull that off. If I took, so I think to me, I'm looking at this is about 2 weeks of trend as the most recent impulse from this double top here. So top, double top breakdown. So I'm taking from this is mid-October high, down to this last Friday's low. So a 50% retrace of that range is going to put me right at 422. Call it 50. And I use these NFP levels. We're going to get another one for sure on Friday. But until then, I have to use what I have. And so this right here, between 422.50 and 420.60, this is serious overhead supply. And I think at the moment, I should not expect anything to go higher than that. That does put us at the very top of an average week's range. If we get some kind of impulse like that and then a lower high, then I'll go ahead and probably look short again. But I'm not looking for new lows like this. The best bull case scenario is that if we base over this 413, it's 413.63, or 67. So for me, below 413.67, then I am just short, right? Like we'd have to be like this, and we are just looking short. And an average week's range from today's open actually brings us all the way back to about 404. And I did want to show you guys something really quick on this. I'm going to go ahead and hide our non-farm payroll levels just for a minute. And this last fib. But there's one thing to look at right now. So this is, if I measure from the lows being October of 22 at 350 and draw fib to the highs here, right? That downside for this week does actually take us down to a 50% retracement, or 404 of this entire move, right? So, to me, like, do we get, it's very unlikely to, it's going to be hard. Something bad would have to happen for us to get below that for me. So I do think that this is like, where you start to look at buying the dip, or maybe just from an equity perspective, maybe even selling some puts this week. But on the right-hand side of my screen, this is a volume profile. And, why I was saying earlier that we're at just such a technical spot that, like, okay, I should be buying here, but there's nothing good going on in the economy. This is what I mean. So what we're doing right now from a technical perspective, we're testing this. We call this a volume shelf, right? So a huge shelf of volume, right? What have we done so far? Just now, we just retested the top of this prior breakout. And so if you're a trader, and definitely if you trade with us, we're not breakout. I'm not a breakout trader. I'm waiting for a retest. You really don't get a better retest of prior breakouts than that right there. So I know that there's not a lot of good stuff out there. Hopefully earnings season saves us. But today we got an extremely clean retest of this breakout. And again, this is that spot where, like, yeah, it looks good. And I do want to be going. Just because it's at a level doesn't mean that we go all in, right? Like, I want to see it base, right? Just because it hits a level doesn't mean anything. Can it go a little bit lower? Sure. But this is a spot where, like, I want to go in, but I want to go in hedged at the same time. So maybe dip your toes in some equity, dipping my toes in some equity, but at the same time, like hedging that equity. I think that's probably the prudent thing to do if you want to go in long, call debit spreads, use a spread structure. Again, the VIX is, what is the VIX today? VIX. Still trending around 20, right? We hit 23 not too long ago last week. I mean, to get back to mean, if we have a little pop, that VIX is going to come back down to 15. And if you're just long calls, you're going to have a hard time holding value also. So that's why I'm saying debit spreads would probably be ideal. Don't buy back, start. So I think so. Whoa, this is a new theme. Don't buy back, start this week. So it could help support. You think you're talking about like bank buybacks? I think they did announce some of that stuff. I'm not sure which buybacks you're looking at. In terms of like BOJ, I think this is the biggest thing, right? So Austin's asking, what are the thoughts on the Bank of Japan? Like, so I'm going to look at TLT really quick. Japan is Japan is one of our largest debt purchasers. And so if they change their yield curve control standards. And maybe, let's say, as an example, their debt, like buying Japanese bonds, becomes a little bit more attractive than US bonds because they don't have to deal with the like currency conversion. That we would lose out on probably one of the biggest buyers of our debt, right? And going back to that beginning of the presentation is like, we're spending a lot of money just to service our existing debt, and the more debt that we issue at this interest rate, well, that means we're going to have to issue more debt. And that's why you're going to see, and we have seen so many bond auctions in like the recent weeks, like just so many bond auctions, because the higher the interest rate is, the more debt that we have to issue just to be able to service the debt that we have. And it's like this vicious cycle. And if we do lose one of those like largest purchasers, yeah, it's going to be funky. Rates would have to go even higher. And Powell really doesn't have any control over that. So we'll have to see where that goes. Hopefully it stabilizes. Hopefully it's a non-issue or nothing burger. I am long gold, by the way, here, GC gold futures. I still like this trade. What I'd say is, gold is at this critical level where it could break out. Does it have to break out? No, I don't think it actually does. I want to have this trade on in gold for multiple reasons. Number one, it goes in the conflict cabinet for me. It's just something that we want to have in terms of, when there's geopolitical issues, put this on. It's kind of like your staple defensive trade, risk off trade. And I don't have any risk of earnings, right? So no earnings risk there. Gold doesn't have earnings. Number two is like, that's going to be the only trade that works in a stagflationary environment, meaning if oil continues to rip, which it didn't today, but it hasn't broken really structured to the downside yet either. This will be one of the only trades that does very well this year. If equities do go higher, that should also mean, and this is the Dixie DXY, that should also mean that I should see the dollar coming down as well, right? If equities go higher, I should see the dollar coming down. If the dollar comes down, gold should also rally, right? Or at least stabilize and kind of chop to the upside. So in any situation, I want to have gold on. I want to be long gold here. Do I think that has to break out? No, it doesn't have to break out. But that's really what I'm looking at. I like that. Maybe you get a little bit of a pull deck. Yeah, for sure. It's extended. No question. But I like it to the upside. Let's go back to this. So we did upside targets on the Qs. What happened to my average weeks range? I must have deleted it. I'll have to put it back. But the average weeks range to the downside sub, where to go? NFP levels. Here, sorry. It's going to be below 413.63. We should definitively see 409, which it looks like we, sniped just a little bit below 409. Then we are looking at like that 404 type retracement. For now, I want to chop up to that 420 level on SPY, and hopefully we just want to monitor and lock in higher lows from here. I'm not worried about that downside gap unless we start trading towards it below today's low. Q's upside target is going to actually take us all the way up to, again, that prior kind of breakdown level, right in that 358 spot. So this is going to be an average weeks range all the way up to 360. Believe it or not, look at that. But to the downside, this is going to be all Apple. 330 is the downside target. Hopefully that doesn't come into effect, but that's where we are. Diamonds, I think right now. So diamonds, and I'll give you one watch. Diamonds as a DIA looked the most constructive. These guys didn't even have like zero look back in terms of hitting that gap. There's one trade that I'm looking at, and again, it's very headline dependent, but this is Boeing. So again, Boeing from swing low to swing high here, we have a 50% retracement. I'm looking at a weekly calendar. This is a broadening range on Boeing's prior consolidation here. We're at the low end of the broadening range, lining up with this retest of support. and a 50% retracement. No trigger yet. What I want to see is I want to see this start trending. Yes, today is the first day. It looked better, but I want to get over this, all of this overhead supply actually. So I'll really start getting long if we can continue to put in higher highs and we break above and hold above this 185 level here. And then I'll start looking for something probably even a little bit longer dated. But here's that supply, like that level that Boeing's running its head up against to right now. If it cannot reclaim this, then we can see an extension to the downside below 175. Then we get straight to 165, which is still a trade that's possible too. Other than that, let's do one more and then we'll call it Tesla. So poor Tesla. Oh my God, Tesla today. I had a short trigger at 206. So I'm going to pull up a 30-minute chart really quick. Just looking at this prior consolidation here. The 206 level to me came from yesterday's low. We are way out of bounds here. Maybe it had something to do with the UAW strikes finishing or whatever being called off of Ford, GM, Stellantis, who knows? But this is just a clean break of structure to the downside. There's no playing with this right now. So I'm short Tesla today. I do own Tesla equity. You know, it is what it is. But this is a funky one. So from here, if we're continuing to the downside, I actually have 180 as my targets for this week, just on a short term pullback, just basic continuation. I would definitely have this on watch. We spun this a couple different ways too in group, but let me move this off. So what's true here is from this swing low to this swing high, we lost a 50% retracement at 225. We know if we lose 50%, we should see 618 very quickly. That was 200, give or take, 205. We lost 205. We should see the next one, and we should actually just forget about the 768 or whatever's. And I just go straight to some type of fair value gap, which does take us down to 179. I'm getting 179 from this order block right here. Here. And this was that last spot where the bulls really stepped in. Again, major pivots here and major breakout there. So I think that we do. I think I see it. It just is what it is. So, you know, watch out for that. This is not a good looking chart whatsoever. I like Tesla, but I don't like the chart right now. If I go from that total swing low to swing high here, again, we're losing a 50% retracement of that entire move. Today, we should see 618. Again, brings you right around that 170 level to the downside. So keep that one on watch. Just again, below prior day's lows, then you're continuing that trend. And then last one, and I'll call it there. NVIDIA is on watch. I think this is going to go either way. Currently neutral, no trade, right? I would have this set. So anything lower than 404, and really, if you want to be safe below 400, we should see 387 in very short order. So basically, this level to this level, we should fill that very quickly. If we're trending an open and close above 412, then we can easily see this bounce right back up to that 427 level up here. So either way, triggers on both sides. This is kind of like directionally neutral. I'd say put this one on watch for Tuesday. Tuesday, I believe AMD reports after the close. This should be kind of like your pairs trade. All right, guys, that's it for now. I got to hop off. I got to space in a little bit, but I appreciate everybody jumping in, and I will see you on the next one. Adios.